Hello and welcome to Startup Street. I'm Arundhati Ramnin, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. Fintech unicorn Cred completes $72 million funding round led by Lath Investment, RTP Global, Safina Ventures and QED Innovation Labs. This latest investment pegs Cred's valuation at $3.5 billion, down 45% from its $6.4 billion valuation in June 2022.
Flick TV, a mobile-first micro-drama OTT platform, has raised $2.3 million in a seed funding round that was led by Stellaris Venture Partners with participation from Gemba Capital and Titan Capital. This fund will be used to scale content production, enhance the platform experience, grow the user base, and build a cross-functional team.
Byju's has sold two major U.S. acquisitions, Epic and Tinker, for a fraction of the original purchase prices. According to a report by Edweek Market Brief, Epic was purchased by China's TAL Education for $95 million, while Tinker was acquired by Codes for just $2.2 million in cash. The report added that these sales were approved by a U.S. bankruptcy court.
Meesho has completed the step of converting from a private company to a public limited company in the run-up to its IPO. The online marketplace has also applied to NCLT for flipping back its domicile from the US to India ahead of that listing.
Apple shares decline in trade as investors are not impressed with announcements related to artificial intelligence at the annual developers conference. Reports suggest Facebook's parent, Meta, is set to unveil a new research lab dedicated to pursuing superintelligence.
All right, those are the headlines that we're tracking for you today from the startup world. Now, fintech unicorn Cred has raised $72 million in a Series C funding round, which we reported earlier in May. Now, sources have told us that this latest round values the company at $3.5 billion, which is a 45% fall from its 2022 valuation. The round was led by Lath Investment, which is an arm of Singapore's sovereign fund GIC. Other investors include founder and CEO Kunal Shah, RTP Global and Safina. Kunal Shah himself has invested around $20 million in this round through his venture capital firm QED Innovation Labs that holds nearly 23% stake in the company.
India's electric vehicle revolution just got a major boost. Deeptech startup Vecmocon Technologies has raised $18 million in a Series A funding. The round was led by the Ecosystem Integrity Fund with participation from Avishkar Capital and British International Investment. Founded by IIT and ISB alumni, this New Delhi-based company is building the brains behind the next generation of EVs, battery management systems, intelligent chargers, and vehicle intelligence modules. With this fresh capital, Vecmocon is set to ramp up R&D, expand its team, and push Indian innovation onto the global stage. Joining me now to discuss this further are Piyush Asati, the CEO of Vecmocon, and Shashwat Rai, the partner at Avishkar Capital. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. Let me start with you, Piyush. Congratulations on closing your $18 million Series A round. What key milestones will this funding help Vecmocon achieve in the next 12 to 18 months? What's, on top of the agenda?
Thank you, Arundhati. First of all, we are really pleased that really marquee investors have supported us. And now within this fundraise, we plan to build for functional safety, high voltage platforms in the electric vehicle segment. And then we want to further accelerate our R&D efforts in the high voltage energy storage and high voltage clean energy and electric vehicle segment. So this is what we want to achieve. And further, we also want to take our products to international markets. We believe EV is a global opportunity, and the products that we are developing is not just for India, but for the global audience.
Absolutely. And, before we get into, what it is you're building and all the new products on the anvil, could you sort of tell us for the fiscal year ending March 2024, you saw 4 times year-on-year, surge in operating revenues, but you also saw a loss of 6 crore rupees, right? Yeah. If you could take us through where you hope to end this year and your path to profitability and what will sort of lead the next leg of growth for you?
Yeah, so last year we have grown significantly, and with this fundraise, we feel that we are going to show a similar sort of growth trajectory this year as well. The growth is also, I mean, electric vehicle is a sunrise industry, and there are new OEMs, new product, new categories are being involved, and at the same time, the industry itself is growing at a pretty fast pace. So there are strong tailwinds there, and not just that, we are also exploring new categories. As I said, we are going to work on high voltage platforms, and these are the platforms where safety critical systems are going to be required, and we are in a pole position to sort of develop for these categories. So we are very hopeful of continuing our growth trajectory this year as well.
So hopeful of continuing the growth trajectory this year as well. But, Shashwat, let me bring you into this conversation. Avishkar Capital is already an existing investor in the firm. So take us through why you're betting big on Vecmocon. You're doubling down on your bet. What kind of role will you play also just beyond providing capital?
Sure. Thanks, Arundhati, first of all, for the invite. And very excited to bet on Vecmocon. So Avishkar, as you understand, is one of the earliest impact investors in the country. And climate is a very, very important theme that Avishkar is heavily focused on. So one of the unique virtues that Vecmocon founders carries, and we have known this team for the last 3-4 years, is that as you can see that they were started in 2016, and they've been seeing the challenges around EV industry, which was a very, very nascent industry back in 2016. So all the product development that Piyush and team have developed have been done in very close quarters with the industry, working with some of the marquee OEMs. And hence, it's a deep tech startup which has been very, very closely connected to the whole ecosystem, which makes the product lifecycle very, very mature. And as you are able to crack more and more products with some of the marquee OEMs in the industry, there's a flywheel which actually gets created. So this is a sector which requires a huge amount of perseverance, tenacity of building the right kind of products, building the right kind of relationships for solving the core problems that a new industry or nascent industry like electric vehicle faces. And that is what builds a very strong moat as well as the high scale potential. As you heard from Piyush, the kind of scale up plans this company has demonstrated, as well as what the future plans are looking like. This can actually become one of the classical make in India stories for the world. And we are very excited to be a partner of that.
Absolutely. And, Piyush, you have plans to power over 1 lakh vehicles, right? What kind of partnerships or collaborations are key to scaling up your technology deployment? And, tell us a little bit about the new products on the anvil that will drive this demand.
I mean, first of all, we work essentially closely with the OEMs in terms of their requirements. When OEMs launch their new vehicles, there are requirements in different areas of compute systems and power electronic systems. And when we are engaging with these OEMs, most of these OEMs have plans themselves to launch new vehicles where we are embedded into their vehicle. More on top of it, we are also working on systems which are more future proof, in a sense that newer technologies are evolving, and as tech is evolving, the platform that we have built is also evolving and is becoming more and more mature. And as electric vehicle demands further soars, we believe more OEMs are also going to come up with more exciting products, and we will be a key partner in their journey.
Absolutely. And, Shashwat, if I could bring you back into the conversation, if you could sort of take us through, the sectors that are looking exciting for Avishkar. What's the investment roadmap for the rest of this year? What are you betting big on?
So, Arundhati, we continue to remain focused on 3 big themes. One is livelihoods, where a lot of these emerging models around consumer and agriculture comes in play. And that is an area where we have done a significant amount of work across multiple funds run by Avishkar. Financial inclusion is the second big theme, where Avishkar has done significant number of bets. We have financed multiple MFIs which have become SFBs in the country, and we continue to see more and more verticalized players. So from this fund, we have already invested in a couple of thematic financial institutions, one focused on affordable housing called Altum Credo, as well as one MSME financier focused on equipment financing called Electronica Finance. And the third big theme which is emerging, where Vecmocon falls in very nicely, is the climate theme, where we are backing these innovative startups which are building from India for the world. And there, besides Vecmocon, we have already taken a bet in the green hydrogen sector in a company called Nutrace. And we will continue to look at climate in a big way in the upcoming years also. So thematically, these are the three broad themes where portfolio construction will continue to happen for Avishkar.
Sure, absolutely. Piyush and Shashwat, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you so much, Arundhati.
All right, moving on to what else we're looking at today in news, and that is another company that has raised funds. Joining me now is Stable Money, which is a wealth tech platform that has secured about $20 million in a Series B funding round led by Nandan Nilekani's Fundamentum partnership with investment from Aditya Birla Ventures and continued participation from all the existing investors as well. Saurabh Jain, who's the co-founder of the company, is with us now. Saurabh, thank you so much for your time here on CNBC TV18. It's a pleasure to have you here, and congratulations on that fundraising. Let's start with the objectives of this fundraise, this round that you've just raised. Where do you plan to deploy this money for growth?
Thanks, Ritu. Thanks for having me on the show. I think this has been a significant confidence given by the investors. I think all the previous investors who have been participating in the round. And what we have seen in the last 2 years of building Stable Money is that there have been a massive inflow of customers who are new to wealth tech, because we have been launching our FD product for the last 2 years, and these are the investors who have not done most of the mutual funds or the equity investments. They are coming for the first time on a wealth tech platform, and we believe there is a very deep market for this kind of a product. We have around 65 lakh crores worth of FD investments. This is the largest asset class in India. And we believe that tier 2, tier 3 city, which has a large cash and do investments in some of these instruments like fixed deposit, I think there is a lot of potential. And we being the market leader here, I think this is a great opportunity to leverage this fund, go deeper and build a strong distribution for this customer base.
Well, Saurabh, you began the company, of course, with the idea of fixed deposits. But, what other new wealth products you have in the pipeline, especially now that you've raised this money? And what are you really doing to go beyond just the tier 1 customers into tier 2, tier 3 towns as well?
Yeah, so I think in the last 6-8 months, we have been trying our hands on a new fixed investment product, which is seeing a lot of uptick into the market, which is called corporate bonds and the government bonds. We have launched in a small beta testing in the month of September 2024, and we have been seeing 100% month-on-month growth on this product, and we'll be doing more than 100 crores worth of investment in corporate bonds just this month. And that's been a massive boost for a new product. And we believe that there is a lot more potential to build a corporate bond, a government bond as a new category in the wealth tech ecosystem. And we have always thought that the customers who have been doing fixed deposit, who have been more conservative and the risk averse customers, I think they are willing to go a little extra, take a slightly higher risk and go for that incremental 2 to 3% on the corporate bond. So that's the new product that we have on the roadmap, and we plan to scale that for the next 12 to 18 months.
Okay, what about something like mutual fund? I mean, is that something you aspire to get into, maybe in the medium term?
Yeah, I think mutual fund is a very crowded market, Ritu, so far, and there has to be a real value to our customers. And what we have seen as a great entry point to mutual fund and see how the market will behave is the gold mutual fund. And if you see across all the platforms, across all the mutual fund AMCs, I think there is not so much push on the gold mutual fund, because so far sovereign gold bond was a great product for the investment, right? But now with the government pulling back on the sovereign gold bond, we believe that the gold mutual fund becomes the best gold investment that anybody can do, which has a tax benefit, which has a SIP benefit, and it's a mutual fund confidence as well. So that's the first product that we plan to launch in the next quarter. And once we see an uptick on that and how our customers are behaving for the mutual fund as a product, I think then we plan to scale it to debt mutual fund, where there are some unique mutual funds like arbitrage funds, liquid funds, debt funds, which is not seen so much uptick into the consumers so far, because always mutual fund is considered as an equity mutual fund. So this is how we plan to enter into the mutual fund. And if that goes, then maybe go for a slightly higher spread of getting into the equity mutual funds as well.
Okay, so start with debt, but eventually look at equity, even though you say it's a crowded market. But let's talk about how much of that market you can really capture. You say you have about 20 lakh users now and an AUM of 3,000 crore. How do you expect this to grow in the next 2 to 3 years?
We believe that we'll still keep acquiring customers for the fixed deposit, and fixed deposit grows by 6 to 7 lakh crores every year. So we want to capture 2 to 3% of that. So we believe that by June 2026, we will be at 10,000 crores just on the fixed deposit. We'll be doing a couple of thousand crores on the corporate bonds. That's our aspiration. And if the mutual fund product sees an uptick, I think that's the incremental AUM that will add to that. So that's been the plan so far for the growing the AUM.
All right. Let me just step back and finally ask you then, Saurav, any early signs you see in terms of trends in wealth creation for average Indian, especially on the debt side? What products do you see that are most in demand, and where are the biggest gaps that you've seen?
See, so far in the last 5, 6 years, most of the innovation has happened in the equity and the mutual fund market, right? And that's where the most of the startups have come in. And fixed income investment has always taken a backseat, but now with regulators pushing as well, there are new laws coming in. We believe that there is a lot more scope of doing a tech innovation, and that's why some of the fixed deposits that we have is very unique. You don't have to create a savings account; you get instant withdrawal, SIPs, RDs. All of these are done completely digitally on this. And there was a large gap in terms of innovations on the fixed deposit and the corporate bond side, and we want to fill in that. That's a very deep market. We just believe that focusing on just these two products over a long to medium term has a potential to get into at least few lakh crores worth of AUM from these products.
Got it. Well, and we wish you the best with those plans, Saurav. Thank you very much for your time here today on CNBC TV 18.
Thanks, Ritu. Thanks for having me.
On that note, it is time for us to head into a short break. But coming up next, clean tech startup Promethean Energy secures $2 million to help industry slash carbon emissions, cut costs, and move closer to climate targets. We put the founder on the hot seat to find out more. Stay tuned. Welcome back. You're still with us on Startup Street. Industrial decarbonization is becoming a critical priority as countries strive to meet ambitious climate goals. Leading the charge in India's clean energy transition is Promethean Energy, a Mumbai-based clean tech startup that designs advanced industrial heat pump and waste heat recovery systems to replace fossil fuel-based heating in factories. Fresh off a $2 million pre-Series A funding round led by Transition VC, Promethean Energy is poised to scale rapidly, helping industries cut carbon emissions, reduce costs and adopt sustainable thermal energy solutions. Joining me now to discuss this further is Rajat Agarwal, the co-founder of Promethean Energy, and also with me is my colleague Ritu. Rajat, thank you so much for taking time out and being here with us on Startup Street. You know, you're a clean tech startup that's focused on decarbonizing industrial heating, right? If you could sort of tell us a little bit about what led you on this journey, and if you could talk to us about the kind of impact that you're trying to create. Rajat, I think you're on mute. You have to unmute yourself.
Sorry. Hi, Arundhati, and hi, Ritu. Thanks for having me here. When we graduated out of college, we identified solar as a big thing, but the limitation which we knew was how to decarbonize fossil fuel consumption in industries. And that quest of ours led to starting Promethean Energy, where we started developing technologies which can prove to be the alternatives of fossil fuel. We recently got the $2 million investment. Our mission was and is to decarbonize industrial heating, which is one of the hardest to abate sectors. And the confidence of our investor is in our mission. This investment would lead us in deepening our technology leadership and also accelerate our on-ground operations.
Rajat, hi. This $2 million pre-Series A round that you've raised, what are the plans as far as deployment is concerned? How are you looking to accelerate your growth and product innovation with any new products on the anvil as well?
Yeah, so we are planning to increase our efforts in manufacturing, R&D, and sales, especially with high-temperature heat pumps, which are for industrial usage, and our digital monitoring solutions. Part of the fund would go in hiring best of the people in technical and operational roles. We also plan to set up sales and service network and teams across India and neighboring countries. Part of the fund will also go in strengthening our supply chain and making strong manufacturing ties, which can lead to reduce the lead time of our products.
Sure. And, you know, Promethean's heat pump and waste heat recovery systems are tailored for Indian industrial conditions, right? Can you sort of share specific challenges that you've, sort of overcome and solved for local factories? And how do your CAPEX and ESCO models help industries adopt clean technology?
Yeah. So heat pumps were commonly used in Europe for residential heating, whereas we adopted this technology for industrial heating in India because India has a tropical weather which doesn't require residential heating. So this technology was transformed for industrial usage. In industry, there is requirement of high temperature heat, which can be an alternative to steam. So we had to change the technology to suit for the industrial requirements. That was number one. Sorry, what was the second part of the question?
I was just asking how you're sort of giving these, how you're giving this at a lower cost to your clients.
Yeah. So, right. So the engineering is a cost-intensive proposition. So that's why we also innovated the ESCO model, wherein the customer gets the product free of cost, and whatever savings they generate on a recurring basis, they share the savings with us for a few years or for the contractual agreement period. So from the day the customer starts savings, and it also helps us in maintaining the relationship with the customer for a multi-year contract.
All right, Rajat, that's all the time we have. Many thanks for joining us here on CNBC TV18. We wish you the best with your venture ahead. Thanks very much.
Time for us to take stock of the other stories on the radar. Z Entertainment has entered into a strategic partnership with content startup Bullet to launch India's first microdrama app. Z is set to acquire stake in the startup and Bullet will be launched with Z5 ecosystem. But what is this deal all about? This is all for microdrama, which is short video stories which are creator-driven and designed to fit mobile-first consumption habits of younger viewers.
Well, in other global news that we're tracking, Meta's Mark Zuckerberg is setting up a team of experts to achieve a so-called artificial general intelligence, AGI, or machines that can match or even surpass human capabilities, according to a Bloomberg News report. Now, Zuckerberg is reportedly building this new AI team alongside an investment of more than $10 billion in Scale AI, and this plan to personally recruit 50 people, including a new head of AI research for the AGI team, is driven partly by the frustration over the performance and reception of Meta's latest large language model, Llama 4, according to the Bloomberg News report.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.
Hanji, I can hear you.